About a month ago, I posted a video about how to prepare a cash flow forecast for your business. But before we even get to that, I was thinking I needed to back it up a little bit and talk about what are the types of things that do affect your cash flow, the ins and the outs. So this is a little bit more conceptual. I want to bring this information to you guys so we can think about cash flow before we actually start the exercise of doing it. All right, so if that sounds at all interesting to you, please stay tuned. If you're not already subscribed to the channel, I'd love to have you as a subscriber here. And I also want to let you guys know about our new channel, which is the Financial Clarity Podcast. And I've been really excited to start a podcast. I'm the host and I'm interviewing lots of different entrepreneurs and people who have been successful growing their service-based businesses. And with that, I'm also kind of asking them questions about behind the scenes, like how are they doing it? What do their teams look like? What are their financial challenges as they've been growing, and what mindsets have they had to overcome to get to the place that they are? So if any of that sounds interesting, I would love to invite you to either subscribe on the podcast app that is your favorite. We're on iTunes, we're on Spotify, we're on all the things. And then we also have this YouTube channel as well, where you can watch video conversations instead of just listening to it. So if you prefer the video, go and check that out. It is Financial Clarity Podcast. And thank you for subscribing. We really appreciate it. When we think about cash flow in your business, think about that word flow first. So there's ins and outs, okay? Think about water, like coming in and going out, like the waves crash in and crash out. I also like to refer to cash in your business like the breath, like you have to breathe in and you have to breathe out to survive, just like your business needs cash in and cash out to survive, okay? We can't survive too long without any cash, and we also we can't hold our breath for forever and not spend any cash if we want to take that analogy a little bit further. What I want you to think about today is what are the things you need to be thinking about when you're planning for your future cash, because we can't just look at our profit and loss statement and say, okay, the profit at the bottom of that is how much cash I'm bringing in. So if I, do my budget and I just stay by, if I operate my business by my budget and I get the profit amount every single month, I'm going to be fine with cash, right? That would be great if that's the case, but we always need to factor in some other forces of cash flow. And these forces are the things that are going to be drawing our cash out and also ways that we get cash into the business. So this concept of like this terminology, forces of cash flow, I actually stole it from Greg Crabtree in his book, Simple Numbers, Straight Talk, Big Profits. It's back here somewhere. It's orange. That book is really great, but I'm not actually going through his forces of cash flow in this. I've just kind of stolen the term because I like it. So thank you, Greg, for that. Forces of cash flow, some things we want to think about. The first ones are what is the cash coming into the business? Where does it come from? This is really going to be important as you work on your cash flow forecast and you think about planning for cash in the future. You need to know, where is cash coming from? Where could we get cash from? And here are the main ways that you're going to get it. So the first way that you're going to get cash flowing in is revenue, sales. This is like top line on your P&L. When whatever it is you're doing in your business, it's the money coming in for doing that thing. If you are a service provider, it's providing services and that service income. If you are selling products, it's when you sell, you get paid for those products. If you're manufacturing and you sell those things, same thing, okay? So that's top line sales. This is gonna be the highest quality, and I wanna say this very specifically, this is the highest quality cash in you can have. And I say that because this is what your business is generating. This is like when your business is doing what it should be doing, it's bringing in cash. This is where you want most of your cash flow to be coming from, okay? We don't want to rely on these next things that I'm talking about. Revenue is number one. Number two is debt. So you can get cash coming into the business by relying on debt. So if you get a loan from a company or from a bank and you, let's say it's $50,000 and that money is deposited into your bank, that increases your cash because now you have $50,000 that you didn't have before. That increases your cash, which is great for cash flow. But you need to think about the fact that you are eventually going to have to pay that back out and push it back out. Unlike revenue, where all of the money's coming in, you don't have to pay it back out to anybody because you don't owe it to anybody. You actually earned that money. The cash in from a debt infusion is a way that cash can come into the business, okay? Or just relying on any debt in general, that's a way that you can bring cash into the business. Would be like a line of credit if you borrowed from a line of credit, or even if you got like a cash advance from your credit card, something like that. That's relying on debt to bring money into the business. So not our favorite way to bring money into the business. The next way that you can bring money into the business is by getting investors. And so this can look like, big institutional investors. This can look like friends and family. This can look like even crowdfunding. There's lots of different types of investments that could be happening with cash coming into the business, but that is another way. Again, this is not as high quality. I don't like it as much as I love revenue, because this means that you're breaking apart the ownership of your business and you're starting to diffuse your ownership. So sometimes lots of businesses will get investors and that's totally fine. But just when we're putting about the quality and where I like to see cash coming in, I like to see it coming in from revenue first. Now, another way that you can bring cash into the business would be an owner's investment. So this could either be, if you're a sole member, then maybe you take some personal money from personal savings and you bring it into the business to help get the business up and running. Or maybe if the business is running into hard times, but maybe you had some infusion of cash on your personal side, you can bring it into the business. So that's another way that cash can come in. And, where possible, I do like this way of bringing cash into the business, maybe better than some of these other options, because it's not something that you don't have the interest from, maybe to a bank. And then you also don't have the ownership diffusion that you have when you take on investments from other people. So when the owners put in money, it's their baby. So they're like a little bit more willing to put in money when they know what it's going towards and they have the control to be able to make those decisions. Okay. But all of those things are ways that cash can come into the business. Yes, there's like potentially some other ways, but those are going to be the 4 main ways that cash will come into your business. And so when you're thinking about your cash flow forecasting, you do want to think about like, okay, I can plan for revenue. I can plan knowing when we can kind of be strategic about when we make debt draws. We're probably going to know when we're going to get investments, and we can decide if the owners need to be putting in money or if they don't need to be putting in money. So all of those things are available. There's line items on the cash flow forecast that I've made available to you guys that you can get in the description box below. It's a free download, and those are you'll see all those different types of things on where you can input into that spreadsheet. Let's talk about cash outflows, because this part is, there's lots of different ways that cash can go out of the business. And you guys are probably thinking, yeah, I know. This is why I'm here watching a video on cash flow forecasting, because I don't know where my money went. This is really important. So there's kind of 5 main categories we're going to talk about for cash going out of the door. And the first one is going to be your general operating expenses. This is the money that you have to spend in order to operate your business. I'm including, even though operating expenses might not include cost of goods sold, I'm including it for the purposes of this conversation. So the money you spend to buy your supplies for what you're selling would be your cost of goods sold. Any kind of labor you're spending, rent, any type of office supplies you're spending money on, marketing and advertising, all the different things that you're spending money on just to operate your business. That's going to be the number one way that money is going out the door. We obviously know that. Okay. So if you need to be saving on cash flow, you can try to lower your expenses. That's why we would do that. But that's kind of the obvious one. We all kind of know like, okay, yeah, I've got payroll going out. Like that's going out the door. I understand that piece. So what are the other things? So the other thing that kind of gets missed a lot when we think about planning for our cash in the future is future tax liabilities. And I would just put taxes here as like the line item. So a lot of times the taxes that we need to pay, like federal taxes, for example, a lot of times they are not showing up on our profit and loss statement. And so again, when we see that profit number, we're going, wow, that's profit. That's maybe cash that I have to do something with. Let's say you make $20,000 in profit in a month. If that's the case, that doesn't mean that that is all just available for you to spend or maybe take home as a distribution. That profit, you need to pay taxes on it. And because we don't pay taxes, or we don't like have our we don't know exactly how much tax is due until we do our tax return at the end of the year. We have to pay estimated taxes throughout the year or be saving for those taxes, kind of depending on your method and how you end up doing your taxes with your CPA. These estimated taxes, oftentimes people forget that they need to make those payments. So with that, and we have lots of videos on estimated taxes and tips to like make sure that you're saving for taxes every single month and things like that. So you can check out those videos, but estimated taxes are something that people often forget about. So when in the cash flow forecast that we have a line item for estimated tax payments every single month, or tax savings, the amount you want to move over into a tax savings, so that you can kind of build that up and make sure that you're planning for that in your cash flow. The next category I want to mention to you guys is debt repayments. So similar to how a lot of tax payments don't show on the profit and loss, your debt payments don't show up on your profit and loss either. Only an interest portion would actually show up on your profit and loss. So again, that profit number that you're seeing at the bottom is not your cash flow. That's not your cash flow. That you are going to need to like back out some of these other things. So if you are paying on, let's say, an EIDL loan, or you have equipment loans, or maybe you have like some big outstanding credit card payments that you're trying to pay down, or any kind of loan, really, those are showing up. We call those balance sheet transactions. So when you're paying down the principal of the loan, that shows up on the balance sheet. So let's say you made a big $10,000 payment to your credit card and you had $20,000 in profit in your business at the end of the month. That's $10,000 of cash flow that you don't have to do other things with. I'm all for paying down credit cards, and that's great. You just need to be thinking about that before you take a big $20,000 distribution check to yourself and then wonder, where did all my cash go? So always remember that debt repayments need to be factored into that cash outflow number. Another thing that you need to think about with a cash outflow is anytime you do capital purchases, so that would be buying equipment, buying any kind of asset. So anything that would be sitting on your balance sheet, maybe you buy a bunch of computers that you are going to capitalize and put on your balance sheet, or maybe you even bought like a truck or a car to use in your business. Those are assets that if you are expending cash, those are going out of your business, but they're not showing up on your profit and loss statement. Again, they're showing up on your balance sheet, and you need to make sure you're planning for that cash going out the door. Okay. Now, similarly, that's kind of spending money to buy an asset. Similarly, you might be taking money and putting it into savings that you don't want to touch in your normal operating cash flow. So I would include this kind of in the same category, that like maybe you're saving, but you don't want to include that to say, okay, well, I have this much cash to make decisions with because you're trying to hit a savings goal or something like that. So that would also, I would kind of consider that like building up capital. So I'm putting that under capital purchases for the purposes of this line item here. And then the last one, but certainly not least, in the cash outflows, this is probably one of the most important after the expenses, is owner's distributions. So owners, when you are taking a distribution from your business, so let's say you're an LLC and this is the main way that you're compensated, taxed as a sole proprietor, you always need to make sure that you are factoring in that distribution out, because that's another item that does not show up on your profit and loss. And you might not be thinking about the fact that that is cash going out, and you need to be paying attention to that. When we take all of these things, all of the cash coming in, all of the cash going out, we want to model it out and plan for it. And that's what we do in the cash flow forecasting spreadsheet. Okay. You can use another spreadsheet if you'd like, but make sure you consider these other inflows and outflows so that you can make sure that you are thinking of everything, all the moving pieces in your business, because most of us are going to have, especially on this outflow side, are going to have each one of those bullet points sometimes. And you don't want to just be thinking about income and expenses as the only two forces of cash flow. You've got these other moving pieces as well. I hope that's helpful. Now, we will be going over a couple more videos for cash flow and budgeting over the course of the next couple months. So make sure you are subscribed to the channel and go and check out our other cash flow forecasting videos as well. All right. Well, thank you so much for being here, and I'll talk to you later.